We're joined this morning by Ashok Atluri, who's the Chairman and Managing Director of Zen Technologies. Sir, thanks so much for taking the time. Absolute pleasure, as always, speaking with you. As I understand it, there were a few procedural delays and a few delays in the initiation of contracts. Is that the reason why the revenue downtick is taken place, and do you expect that to reverse in the second half?
Because we were doing some regular contract for simulators and training equipment, the process was going on. Then Operation Sindoor happened, and suddenly the emergency procurement took precedence, and the regular procurement kind of slowed down. And that is the reason that the order book is not so strong as of now. And we would have expected, had the orders come earlier, the second half we would have executed it. But taking all into consideration, I think the second half, will definitely be, equal or better than this. But overall, our expectation is that the orders will start coming in the second half, even though I'm not predicting the exact month or date in this regard.
Got it. Mr. Atluri, good morning. Neeraj here, and wishing you a very happy summer 2082. How much of the current order book, sir, therefore, would, I believe it's what, 350 odd crores, executable, I mean equipment order book, excluding the AMC, is executable in the second half in order to support the revenue run rate for FY26?
Yeah, I think it should be about 230 crores or something like that, out of that. And we may have some more orders coming in, even that may be executed. But at this point in time, Neeraj, I'm thinking about the smoker who read so much bad about smoking that he finally gave up reading rather than smoking. So I think will be a little careful with predicting, because my ability to predict has not been so right.
No, fair call. No, the only thing is, Mr. Atluri, based on what you've done in FY24 and 25, right, and maybe a couple of years earlier, the expectations are so high that when the misses come in, they seem surprising. And then, therefore, the questions come in as to, is there something wrong in the ecosystem, or is it just a delay and not a denial? So I think that would be the broader question. Is it a order, process, etc. delay which comes in the second half, whichever month, quarter it comes in, doesn't matter? Or is it now difficult to predict that?
No, I think we are very, very sure that the ecosystem is very favorable to companies like Zen Technologies that are, developing the IP and not just reselling or, doing TOT and doing it. So ground up, we are developing the thing. And we see not only that, in the recent trials of the anti-drone systems, we have really excelled not only in soft kill, but, remote control weapon station from our partner, our subsidiary AI Turing, the system itself from UTS. All this converged, and we can see the pride not only in Zen Technologies but even in the armed forces, that Zen has actually delivering products that are absolutely world class. So to your question, that it is absolutely just delay, procedural delay, nothing, and we don't feel any sense that there is going to be any change. I think the growth is expected to be as strong as ever, and I have been talking about on a cumulative that we'll be hitting 6,000 crores. That still, I think that still holds very, very strongly in my mind, that the next 2 years, this year may be muted, but next 2 years are going to be very strong.
I just want to reinforce the point so that my viewer and your investor knows exactly what you're saying, Atluri sir. And then I want to get into the acquisitions that you've made in inorganic opportunities. But what you're essentially saying is that the second half you expect order inflow to recover and be better than it was in the first half, but you expect that the conversion or the conversion to revenue is likely to be along the same lines as what you've seen in the first half. Am I getting that right?
Yeah, yeah, you're right. I think absolutely on that. And we expect the orders to come in the second half, and most of the orders will get executed in the next financial year. They may not get executed in the current financial year.
Okay. I do want to ask you about the acquisitions that you've made, because you've made quite a few key ones, and seemingly along the ethos that you have of creating from the ground up as well. I'm wondering what the revenue streams will emerge from those acquisitions, and any that you have on your anvil right now, especially when the government seemingly is very keen on developing the maritime capability in its announcements that it has made in the recent past. That seems evident to us.
So, I think our acquisition of ARI was very, very timely. They are the big players in maritime and in maritime, especially marine and naval. And we have started investing a lot of money into R&D at this point in time. And we see that the acquisition is actually, if you see, there are in the consolidation, they have significant contribution by both ARI and UTS. And so ARI, we think that actually with the focus on the Indian Ocean now, there's going to be a big acquisitions happening in the field of training and simulation for Navy. And we are very well placed to take advantage of that. I think, and we are going to deepen our involvement with the Navy. And as we speak, we'll probably be expanding the scope of our products that we have. And again, the way that we have been in the Army, we are number one in the world in Army simulators by far, by very, very long distance. There is no number 2 or 3, maybe it starts at 4. Similarly, we want to get a very, very dominant position in Navy, and that's our agenda for the next couple of years. And I think by the end, by 27 or 28, we should be really number 1 in the world in naval simulation. And I think, and of course, the biggest beneficiary will be the Indian Navy, but even our allies will be completely beneficiaries of this.
Interesting. Mr. Atluri, a quick question on margins. One of the standouts in the quarter gone by, I believe that's on account of lower material costs. Is this something that is likely to play out in the remainder of the year as well? Will you more or less stay within that range of higher range, therefore 37 or thereabouts, or do you see that dissipating?
So, if you look at the margins have been similar to the past, but they have been, because we have raised the money, the fixed deposit interest and some foreign exchange gains were added. So that's why the profits look a little higher. But if you look at the operational EBITDA, it is at the same levels as the previous one. So so if you adjust that, I think the operational EBITDA is at the same level. We typically have been saying that 35 will be the operational EBITDA and PAT will be about 25%. So it is hovering around those margins, only the actual operational EBITDA and operational PAT.
Mr. Atluri, just one final question. Assuming that FY26 stays at about 900,000 or what have you in terms of the numbers, if you are to do cumulative 6,000, that's a 93% CAGR growth for FY27 and 28. You are confirming that you believe that it is possible for Zen to do that?
Yeah, so it should be, you are right. I mean, it should be 5,000 plus crores in the FY27 and 28.
Wow.
And we reasonably feel confident that that can be achieved, yeah.
Great. Mr. Atluri, the earnings conversations are short. We do hope for a longer conversation at some point of time between this quarter and the next, but it's always lovely talking to you. All the best for the quarters ahead.
Thank you so much.
All right, that's Mr. Ashok Atluri. Don't look at this quarter. Try and look at the bigger picture is his message. Don't stop reading for the fear of whatever it was. Yeah, but smoking. Yeah, exactly.